Hello, dear friends. Welcome to Subject Bookkeeping and Accountancy New Syllabus Year 2020. In old syllabus, there were 12 topics. In new, there are 10 topics. So, you might feel that syllabus is decreased, but it's not the case. As two topics are clubbed together and one totally new topic is added, total effective topics are again 12. Also some new things are added, so all the best. The first topic is Introduction to Partnership and Partnership Final Account. The first part, Introduction to Partnership, in which we are going to study meaning and definition of partnership. The Indian Partnership Act 1932, its relevant provisions which are applicable for the accounting. Then methods of capital account. There are two methods: fixed capital account, under which partners capital account and partners current account is prepared, and fluctuating capital method, under which only partners capital account is prepared. Part 2, the most important part and the biggest part of your syllabus, partnership final account. The first part, introduction and necessity of preparing the final account. Why we prepare final account? In which preparation of trading account, profit and loss account and balance sheet with the following adjustments we are going to see. In 11th, we have seen the final account of proprietorship. Now in 12th, from proprietorship we are moving to the partnership, so number of partners will increase, so adjustments are going to increase also. There are many adjustments, some of which we have already studied in 11. Closing stock, outstanding expenses, prepaid expenses, income received in advance, that is pre-received, income receivable, that is outstanding, bad debts, provision for doubtful debts, PDD or also called as RDD, reserve for discount on debtors and reserve for discount on creditors. Next adjustment, depreciation. Next, interest on capital, interest on drawings, interest on loan, interest on investment, and again interest on loan, both side loan, asset side as well as liability side. Goods destroyed by fire or accident, in which two types of goods, that is insured goods destroyed and uninsured goods destroyed. Next comes goods stolen from godown, shop, etc. Goods distributed as free sample, that is advertisement. Goods withdrawn by partners for personal use. Unrecorded purchases, unrecorded sales. Capital expenditure included in revenue expenditure and vice versa. Sometimes the capital expenditure, for example purchase of furniture, they wrongly record it as revenue expenditure, for example repairs, and vice versa. Bills receivable dishonored, that is bounce. Bills payable dishonored. Deferred expenses, that is postponed. Capital receipts included in revenue receipts and vice versa. Capital receipt, that means sale of furniture, is a capital receipt, but if we record it into the profit and loss account, that means we treated it as revenue receipt. Commission to the working partner or the managers based on gross profit, net profit or sales, etc. Next topic comes accounts of not-for-profit concern, that is NPO, non-profit organization. Introduction, meaning of not-for-profit concern and features of not-for-profit concern. What is this not-for-profit concern? They are not for earning the profit, but they are for giving the services. Next come difference between profit organizations, that is organizations doing business, shopkeepers, malls, etc., and not-for-profit organizations, for example school, college, hospitals. Need for maintaining books of accounts and preparing final accounts. If they are not profit organization, then what is the need of preparing final account? That we are going to see here. Meaning of receipts and payment account and features of it, Receipt and payment account, that is nothing but cash book that we are going to study here. Next come types of receipts, capital receipts, revenue receipts. Types of payment, capital expenditure, revenue expenditure, and deferred revenue expenditure. Capital, that means which we are going to show in the balance sheet. For example, purchase of furniture, it is a capital expenditure, and salary paid is revenue expenditure which we show into the profit and loss account. Then comes specimen, that is format of receipts and payment account. Meaning, features and specimen of income and expenditure account. Income यानी कमाई, expenditure यानी खर्चा, उनका account. Distinction between receipts and payment account and income and expenditure account. What are the basic distinction between both? And the last but not the least, preparation of income and expenditure account. Along with income and expenditure account, we have to prepare the balance sheet. Some implied adjustments, that is automatic adjustments, are there. Capital fund. For NPO, non-profit organization, capital is known as capital fund. Specimen, format of balance sheet. Additional information, that is adjustments, outstanding and prepaid expenses. Accrued income, that is income receivable, and income received in advance, that is pre-received. Next comes subscription received in advance and outstanding subscription. Subscription chanda, Marathi mein vargani. Depreciation, capitalization of entrance fees, that is entrance fees, pravesh shulk, usko capital mein dalna. Creation of special fund out of donation. Sometime we receive donation for the purpose of building, then building fund is created. Education fund is created. Scholarship fund is created. Next comes stock of stationery, unused stationery. And the last, opening balances of assets and liabilities from the last year. Along with this, there are some important terms, important items in the NPO. Entrance fees, subscription, legacy. Legacy, that means whenever any person die, before that he make a will for giving the donation, that is donation as per the will of the deceased person. Life membership fees, Ajivan Sabasad Shulk, sale of old assets, scraps, newspapers, etc. Specific donation, that is for special purpose, and general donation that organization can use anywhere. Specific funds, endowment funds, special funds, these funds are created for various purposes that we are going to study here. Next, third chapter, reconstitution of partnership. Reconstitution, that means change in constitution, रचना या संविधान में बदल, जिसमें पहला पार्ट है admission of partner. First, meaning of reconstitution, how the constitution is changed, different forms of changing the reconstitution, in which admission of a partner, need of admission, why we admit some new partner, capital brought by new partner, the new partner has to bring some amount as a capital, new profit sharing ratio, whenever new partner comes in, will give him some new ratio. Sacrifice ratio, for giving some ratio to the new partner, old partner have to sacrifice their ratio. Meaning of goodwill, what is goodwill on admission. Methods of valuation of goodwill, there are two methods, average profit and super profit method in your syllabus this year, because only two methods are suggested for the board syllabus. In CA Foundation there are four methods. Next come treatment of goodwill, how goodwill is treated. Revaluation of assets and liabilities, some assets and liabilities are revalued before admitting a new partner. Adjustment of accumulated profits and losses, that is old profits, पिछले सालों का बचा हुआ profit. And next come the adjustment of capital. Next, under reconstitution of partnership, retirement of a partner, that means when a partner goes out, जब वो बोलेगा I am very tired, I will retire, it's called retirement of a partner, in which we are going to see introduction, that is how the partner can retire, new ratio and gain ratio, as after his retirement remaining partners are going to gain in their profit sharing ratio. On that basis new ratio is calculated. Next come treatment of goodwill, how the goodwill is calculated for the retiring partner. Transfer of reserve fund, general reserve, accumulated profits or losses, पुराने जो भी profits होंगे losses होंगे वो उनको दिए जाएंगे. Next come revaluation of assets and reassessment of liability, that is change in the values of assets and liabilities. Next come adjustment of capital. After retirement, the remaining partners are going to adjust their capital. Next come total amount payable to retiring partner, how it is calculated. Next part under reconstitution of partnership is a death of partner, meaning new profit sharing ratio, gain ratio, same as it was in the retirement of partner. Revaluation of assets and liabilities, amount due to deceased partner's executor, deceased that is the partner who died and his executors मतलब उसके जो भी वारिस होंगे वो, settlement of amount due जो भी पैसा देना बाकी हो settlement, accounting treatment of it that we are going to see,